Hello and welcome. I hope I find you well and your families well. Obviously, we all need to stay safe in these times. But let's just get into the markets. One of the things I want to do is just show you the 15-minute chart. And we had this push up on the Monday. So a decent push up on the Friday, further push up on the Monday, and then Tuesday they just let it go. So we obviously had this wave resistance, horizontal resistance, and trendline resistance. And once we pushed into this area here late in the day, we then started to wind our way down. Spent Wednesday winding down. Now on Thursday, we got this lift off of this. We completely retraced this level here. I didn't spot this till a little bit too late, I have to say, unfortunately. And so the selling worked here, but didn't work into the close. I was shorting here and shorted here and got stopped out on that move into the close. On Friday, we were coming off of this level here all week, and I again saw this a little bit late, but caught a chunk of this, and then we had a 200 pip move into the close. So the signal that we were going to get some kind of bounce was there, and so realised what they were doing up here was selling up here, and then got caught out a little bit here. Was a little bit late in the game, but caught some of that here. So that's the story of last week, that push up and then that gradual sort of flow to the downside until they got fed up with it on Friday, and then just short covering bounce. Everybody took profits after, as it wouldn't. I actually thought it would continue lower. I really thought that would continue lower, at least come and see that for 600 and possibly 400. But then back end of the week we got that. So watch out for that. I think lessons to be learnt from that is we can do a couple of things. You can just focus on the horizontal resistance up there in these bearish markets. Concentrate on the chart pattern. If you get something that's making a lower high and you've got high stochastics, high indicators, doesn't matter whether you use RSI, stochastics, whatever it is you use, even MACD, all those sort of lagging indicators should be reading high to high-ish, and then just basically see if you can get that to break. Simple as that. And then if you've got this key resistance, the market's hanging off this 20,450 or whatever number it is, then try and follow suit. But not an easy week to trade, because this was overnight, this was late in the day on Tuesday, this was overnight. You had a big push up and then you had to turn it around to catch that. You know, a wild three wave, well, more than three wave, 1, 2, 3, 4, 5 wave up into that one, and then a 3 wave down into that one. So a bit of a wild week. Obviously got Easter this week, but that is not the case for the US. Nonetheless, there is very, very little data coming out this week. On Friday, we've got no significant data on Good Friday. Obviously, weekly jobs for the US on Thursday is going to be crucial. Otherwise, it's really thin on the ground. OPEC on Wednesday. Okay, so be careful. Let's just look at this. Zoom up to the 4 hour. I think the 4 hour is really telling on these charts. Right, so here's the 4 hour on the Dow. Let me just get my pen. And you'll immediately note how this fibs on this range has taken us into the lower part of the inner zone, which we come off from. But we are holding the lower level of the outer zone. There's the outer zone. So inner zone, outer zone, come off of this level, holding this level, and now we're mid-flight, midway between these two levels here. What do I think is going to happen? I think we could push higher from here. If we can hold this, I think we could come up to somewhere around the 24 mark, possibly higher, at which point I would want to get short again. So the short levels I would put alarms on your charts for is 25, just over 25, and around that 24 mark. Now, if I'm wrong and we don't get anywhere near that, then we could, obviously this is a major hurdle now, 22.5. So we could simply, let's take that trend line off. We could simply do one final test of this area, this 22.5, and then fall over. How can you trade it? Very carefully at the moment. You can see the stochastics already is very high. The other thing to note is, whereas the volume was increasing as we came down here, the volume is decreasing in all of this. So the selling at the moment is dying off at the moment. So a little concerned that we are essentially, well, I'm not concerned. I just think, you know, that's coming up on low volume is bearish. So I could be wrong about coming up to this 22.5. So I would look for any potential sell signals around here. Let's have a closer look at the actual real area of concern. So that is, I'm looking at this area here. Hang on. I'm looking at this area here, the way in which we fell here. So already we're just knocking on the door of this 21,922,000 and struggling. So if we can't get up here, we eventually come down to 2,800, then we could come and see 20.5, 24, wind your way down to 20,000 from here. Okay, let me just try and clarify that on the chart. But I think the key thing is we're coming up on low volume, so that is still very bearish. If I yank this volume up, just make more of a case for it. So the volume was confirming the trend here, and then you can see how the reversal affected the volume. So we came up on volume. So if we are getting a decent push, you need to see the volume come up. So if this volume stays low in this resistance, then expect that to roll over, and expect volume to pick up on the downside if we start to come down. Okay, so I think this 4 hour is the most telling. Let me take all that off so I don't get distracted with my 4 hour charts and drop that volume down again. Okay, so it's a short week for Europeans. We are very light on data, so we need to tread carefully. On the 1 hour, you will see this was a key. So we spent so much of the week, from Wednesday European time until, well, right for the rest of the week, we spent most of 3 days in this gap down area. So there's the Friday close on the 27th of March. We gapped down, we backfilled, and then we stayed in the drop zone, stayed in the gap down area. Okay, so you can clearly see this 21.5 now is going to be a potential. If we are going to see any lift, I think we're going to want to come and see 21.5 again, which is not that far off. It's only 400 pips off. Okay, so what I'm going to do now is I'm going to update this chart. I'll move that down to the Friday close, and I'm going to push this chart over and now put this zone here. It's going to be, I think it's going to be crucial. Okay, so this is revealing. Just do that very carefully. Right, so we've gapped up. So 21,080 is support. Let's push that chart back. Whoops, didn't mean to do that. I think what I'm increasingly doing when you get range bound, I don't rely on the 1 hour fibs as much, because you just end up cluttering the chart and you can't see the price action and the pattern. Okay, that clearly identifies that zone as resistance. So I'll put a little bar up there as well. In fact, I'll shrink that. So it looks as if we could get up to 22,100 and then we've got this trend line sitting over us. So the moment we look capable of pushing higher, I didn't intend to make this video so long, actually, I apologise, but just watch out for the connection of 22,250 and so on. I'm basically looking for shorts. We've got very high stochastics, coming up on lower volume, clearly in a trend lower, and if I can see this area up here from Friday the 13th, which takes us into that 23. So I'm going to actually put a level up there as well. Right, now I'm going to take that fibs off, which leaves me with this trend line resistance, horizontal resistance, trend line, and a potential area if we do break up. So obviously I haven't even looked at the bigger picture, the main charts now. So the daily, now that's the 2019 lows there at 22.5. So at the moment we do look as if we could come and see that 22.5 on that daily. And there is, you can see the drop off in the volume is more pronounced. Particularly this on this push up here, we came up on lower volume. All right, so just to recap, then I would still concentrate. I think the best thing to do is to let this market settle down. But I think we're going to want to potentially want to backfill at some stage, whether or not that is in the coming days or this week even. I would think it's likely. So watch out for that resistance high again. I'll send you a screenshot of this hourly chart, because already here we are at 10:30 European time and we've got a lower close than 60 minutes already with a high stochastic reading. Okay, but ideally 22,150, 22,300 will be a much better area to short if we get up there and get a sell signal. Okay, quick look at the other markets, because oil has had that big leap. I've got OPEC meeting, I think it's tomorrow, no, Wednesday. OPEC's meeting Wednesday. Let's go back the other way this time. Let's go back to the daily. So there's that big push up. Caught me by surprise. I started trading it down here and got stopped out. Must have been on that Tuesday. Oil could be one of the most interesting markets out there. If the Dow is going to hold up, then I would expect oil to hold up because massive gap here, and so 2019 lows 42.50, 42.50 is up there. So we're coming up on higher volume. So potentially any sort of bad news and shake out the market comes down to $25. That's potentially a buy to see if we can at least get up to 33.20. Let's drill down to the 4 hour again. So I got a lot of resistance up there at 31.10. Tell you what I'm going to do. I'm going to go to the hourly. So gap down. So that gives us, let's do the same thing as I did with the Dow. Let's look at that gap down area and string a zone across the next 7 days, or the next 6 days, 6.5. Right, so that's an important zone. 2684 is potentially, that would sit us right on that close of that hourly, on that first leap. It's possible that we could come all the way down to the breakout area. What would be perfect is a move right down to that breakout area. Remove the gap. Ooh, we closed really high, didn't we? Closed really well on Friday. Quick look at the 4 hour again. I would very much hope, I would love to see that drop all the way back down to those lower 60-minute level. I think on this one, I think on the hourlies, if you to maximise the use of the hourly, take a look at the relationship between the gap and the Asian Open, the Sunday Open, and see. I think we'll swim around in this area here at minimum 26.84, maybe 20.26 will be more obvious, and then see if that holds. Then I think we can lift up to potentially 32. All right, quick look at gold. I've just whizzed through a couple of the charts now because I spent so long looking at these. The gold is getting this lift off. Ever since we dropped around that 1450 mark, we've been pushing up. If the Dow is going to sit up, I think the gold will sit down again. So I think that we could see 1550 again, possibly. If the market calms down, take a look at 1550. Silver is very different because it's industrial metal. I would not touch silver at the moment. I would wait until silver came down to at least 1283. I extend this trend line. I think silver could fall back from, if it closes higher in here, that's really bullish, and we could see 16 again. If we close under 1430, this is in trouble and could drop all the way back there. I think it's more likely to drop out of that. I don't think that's going to push higher there. And let's take a look at the dollar index. Let's take a look at the volatility index. That's coming. So volatility is coming right off. So that bodes well for a push higher. The dollar index. Yeah, for this market, for the Dow to sit higher, this dollar has got to come off. This is the dollar in the coming months is going to be really, really key. The stronger the dollar, I think the more the fear is in the market. So if this does come off, we've had one push lower now, but at the moment all these dips are getting bought. So if we come down to 99.70 area or lower 99.50, in fact I'm going to put a horizontal line on this. I'll leave the trend line on there, but I think that horizontal line is more relevant, 99.50. If we come down to 99.50 and hold, then expect the markets to push lower. Pound. So it's had a retracement, but now struggling. Euro. Let's fib that. I think that's a zone down there. Okay, so this level here is going to be really crucial. If we close above that, we could see a recovery. Most likely, part of least resistance is lower, and parity would be a 161 extension. So the highs are selling. We've had 1, 2. We're currently still in wave 3. So even wave 3 could take us closer to parity. So if we get a little bit of a lift into close to 110, well, if we hold up if we keep closing above these two fib levels, this is a crucial zone already. My guess is that's still looking lower. Now these highs are making significantly lower highs and lower lows. So I think that is still lower. Right, I've created quite a long video. Last but not least, let's look at Boeing. Boeing was the major component of the Dow. Not anymore. And you can see, we had quite a significant volume in that pickup. Well, I personally would not trade that. I think we could easily come and see the 90 area. And then we have to see. If I'm wrong, we've got to close above this 125. We've got to close above a minimum 130, minimum. Let's look at Zoom, because Zoom's been in the news so much. So we had this very nice sort of breakout pattern here. This is the 50-day average here. Picked up on January 28 from 71. We've seen a high of 165. If we fib this range, so we could come and see 194. We're almost done on what 50% retracement down there. I think if that holds, I think that 125 could hold, and we could come and see 194. I will start dipping my toe in the water in that one. All right, thanks for listening, and I will talk to you later on today through the Telegram room. Thanks, bye.